Welcome to Talk Tickers, where we break down the latest earnings calls. Today, we're diving into Melco Resorts' third quarter 2025 results. And let me tell you, this was not your average report. It was a real statement. And the market? Well, the market definitely took notice.
All right, let's just jump right in with the headline number, the one that really moved the needle, a massive 91% beat on adjusted earnings per share. I mean, wow. That's not just a beat. That's the kind of number that makes everyone sit up and pay attention.
And here's the thing, this wasn't just about one single metric looking good. Nope, the strength was everywhere. Melco basically delivered a clean sweep across all the key numbers, which tells you this was a genuinely solid, well-executed quarter.
So, adjusted earnings per share? It came in at a sizzling 21 cents. Now you gotta remember, Wall Street was only expecting 11 cents. That's not just missing the mark, that's completely blowing past it. A number like that definitely puts you on the map. And what about the top line? Well, revenues hit $1.31 billion. That cleared expectations by about 2%. A good, solid beat there.
Okay, and this next one is really important, especially for a business like a casino operator that spends a ton on its properties. Adjusted property EBITDA. It landed at $380 million. That smashed the consensus estimate by a huge 19%. This shows you that they're making serious money right where it counts, at the casino level.
And when you look at it year over year, the story gets even better. I mean, check this out. Revenue growth of over 11%, that's really healthy. But look at that net income number, up 174%. That is exactly what you want to see. It's that operating leverage kicking in big time.
So you might be wondering, where did all this horsepower come from? Well, the engine room was, without a doubt, their properties in Macau. EBITDA there shot up 21% compared to last year. And get this, that was after taking a $12 million hit from a typhoon. Just incredible. Oh, and by the way, their operation in Cyprus, it just had its best quarter ever.
All right, so when you see numbers this strong, the next logical question is, how? What's the strategy here? What's management's playbook that's making all this happen?
Well, if you listen to the earnings call, CEO Lawrence Ho was not holding back. He was incredibly bullish. He basically framed Q3 not as the peak, but as the launching pad for an even bigger Q4. And he came with receipts, pointing to an all-time record in October for their mass-market gaming at the City of Dreams. That's not just talk, that's proof that momentum is actually building.
And this kind of momentum doesn't just happen by accident. It's all part of a very clear three-part strategy. First, they're beefing up their premium offerings to attract the big spenders. Second, they're optimizing their portfolio of properties to get the most bang for their buck. And third, they're very methodically and carefully paying down their debt.
So here's the key takeaway. The market didn't just hear this story, it believed it, and it voted with its dollars. The reaction from investors was fast, and it showed some serious conviction.
So check this out. The stock gapped up almost 5% right at the open. But it wasn't one of those quick pops that fades away. No way. Over the next 4 days, the stock just kept climbing, adding another 8%. This tells you it wasn't just a quick trade. It was the market fundamentally rethinking the value of this company.
And you want to know how we know this was a serious move? Look at the volume. The number of shares traded on earnings day was 3.5 times the daily average. That's not your everyday retail investor. That's the big money, the institutions, making a very decisive bet.
Okay, so that's what happened. Let's pivot now and look forward. What does all this mean for the stock from here on out? Where do we go from here?
So, after such a knockout quarter and that huge market reaction, what's the actual call on Melco? Is it a buy, sell, or hold? All right, let's break it down. The bull case, it's pretty compelling, right? You've got this powerful momentum in Macau, you have the upgrades to their casinos clearly working in pulling in customers, and you've got this disciplined plan to pay down debt, which could mean dividends are back on the table by 2026. But you've always got to look at the other side. The bear case is very real, and it all comes down to that mountain of debt. We're talking over $7 billion, plus the constant risk of policy changes or new regulations in Macau, which is always hanging over these stocks. So, weighing all that, where do we land? Our call here is market perform. Look, the operational momentum is fantastic. You absolutely can't deny it. But now that the stock has run up, that good news feels pretty well balanced by the big risks, namely the debt and the policy uncertainty. For us, the risk versus the reward just feels pretty neutral right here. And really, it all boils down to this one key question for anyone looking to invest in Melco right now.
With that carrot of a dividend possibly returning in a couple of years, can the company pay down its debt fast enough to create real value that outweighs the unavoidable ups and downs and the risks of being so tied to the Macau market? That's the multi-billion-dollar question, isn't it?
And just a quick reminder, as always, this is not financial advice.